Welcome back to the next session of Tame Bay Live. Super excited about this session because it's how to supercharge your growth in 2022. But we're actually going to be looking at Brexit 12 months on. A lot's changed with Brexit, as you'll be only too familiar with. Selling to the EU has changed. In fact, legislation is changing around the world, not just Brexit, but the countries are looking at how they can collect more income, more revenue for the exchequer, which generally means taxation. And that means taxes and duties and VAT. I'm thrilled to welcome Rick and Alex from Avalara, some experts on the matter, because VAT is, as I'm sure it's not yours, it's not my expertise. I'm more interested in retailer than the taxation, but it is something we've all got to get to grips with. So welcome, Rick, welcome, Alex. How can we take advantage of the legislative changes to grow our businesses and excel in 2022?
Thanks for having us, Chris. I appreciate you having us on again. That's a big question. That's the biggest question we get on a daily basis. Hopefully, we'll be able to take you through some of the interesting challenges that is putting up barriers to accelerating some of that growth, and hopefully answer those as well to solve them for you. Other than Alex, if you want to add anything about.
Yeah, no, absolutely, and thanks a lot, Chris, for having us on. Whenever people see Brexit in the headline of a presentation, there's dread that we're going to talk about the political process, recap, a lot of the horror stories. But what we're aiming to do today is, looking back over the last 12 months. What are businesses doing now? We also saw lots of other developments come in around the same time of Brexit, which did help and change how UK and European businesses traded with each other in the post-Brexit environment. So things like the one-stop shop, the import one-stop shop. We got some interesting facts and stats to share there from the European Commission. We're also going to look further ahead and further afield. So, not just looking at the UK and EU, but other markets which, Brexit may have opened up in terms of free trade agreements, as well as businesses looking to take advantage of a wider market. And then finally, we're also going to look at some other legislative regulatory change, both in relation to VAT, also eco-taxes, another type of indirect tax and compliance requirement, which we're now seeing apply to e-commerce vendors and also to the marketplaces themselves. And we're also then going to look at the direction of travel in relation to e-invoicing. So, particularly important for B2B sales, where you have to provide a valid tax invoice. But also we're going to start exploring some of the trends we're seeing around B2C invoicing, so things like QR codes. But great agenda, and of course, looking forward to answering any questions as we go along.
Yeah, and just to jump in, if you do have any questions, just beneath your screen, if you're watching this live, you'll see a box where you can actually drop a question in, and we'll try and pick those questions up at the end, or if we've got time for them all, or perhaps as we go through. If you're watching this on replete, then hold on till the end when you'll get some contact details for Avalara. But if you've got questions live, drop them in that chat box now.
Thanks, Chris. I'd actually jump into some of the timelines around what's happening. Maybe start by looking at last year and then move on to what to look forward to.
Absolutely, Rick. So last year, 1st of January 2021, the transitional period for Brexit finally ended. The good news up to that point was nothing really changed from a VAT and customs perspective. But from the 1st of January, suddenly we had the new trading relationship, so an actual customs border. And a lot of businesses were struggling how to navigate and cross that border in terms of not only having the relevant information to make customs declarations, but other compliance requirements that suddenly resulted from the UK no longer being an EU member state. So things like possible new VAT registrations, EORI numbers, indirect representative having to be appointed in some European countries, as well as on the customs side, having to appoint an indirect representative to clear goods into Europe. So this came as a bit of a surprise to a lot of people. In fact, the freight industry as a whole, because it wasn't technically a new requirement. It always applied under the Union Customs Code, the customs legislation in every European country. But Brexit was really one of those catalysts and trigger points that a lot of the customs authorities suddenly, looked at their rules and how they enforce them and said, actually, if you're a UK business and you want to be an importer in your own name into our country, you need to appoint an agent who's going to be jointly and severally liable. So certainly an issue, a bit of a teething problem, and led to businesses having to find an agent who would provide that service. So we had a 6-month period, before the EU issued their delayed e-commerce package. So the e-commerce package did, a number of things. It reduced the distance selling thresholds between EU member states. It got rid of the import VAT exemption for low-value goods under 22 euros, and introduced the concept of the import one-stop shop (IOS) to allow businesses to register in a single member state, have a single VAT return, and charge VAT at the point of sale. The goods would then clear customs through a green channel, and hopefully a much better customer experience. And the feedback we were receiving at the time was, actually, for UK businesses, this is as close to business as usual pre-Brexit as you could get, because in that 6 months before the simplification, people were trying to find any pragmatic way they could to get goods into the market to consumers. Sometimes, yeah.
Sorry, on the in particular with the e-commerce VAT package, what type of feedback have you received from the marketplace sellers, which a large proportion of this audience will be, and the interaction they've had with the deemed supplier rules? Have you heard much from our marketplace clients on how they've dealt with deemed supplier and being responsible for a lot of these transactions?
Yeah, no, absolutely. So certainly a very big onus being put on marketplaces. It's no surprise that tax authorities would rather deal with one single business as opposed to tens of thousands, if not hundreds of thousands, of individual vendors. So there's of course the challenge of understanding the requirements, identifying all the different use cases that would apply. There is then the added complexity of having to understand where the goods are being fulfilled from. Because that's going to then drive the VAT treatment, how they're reported, as well as the value of individual consignments. Because if the consignments are below 150 euros, you can use the IOS when the goods go in, but if they're not, they need to be imported a different way. So quite a large exercise. Some changes to IT. The checkout process as well. Suddenly a huge change in terms of tax determination. Being able to charge the right rate of VAT across the EU, charging it, and looking at invoicing requirements at the same time. So, maybe initially some teething problems, and in a minute we're going to look at some broader teething problems across the entire of the e-commerce package. But I think now 6 months in. The rules, the processes are beginning to bed down. Marketplaces and vendors are getting used to this relationship, and I'm sure in the some of the first few weeks, months, maybe we saw cases of of double taxation. Some of the underlying sellers, believing they were still responsible for tax. The marketplaces already accounting for the VAT too, as well as maybe some confusion between seller and marketplace in terms of any invoices, sale of goods between the two. I also just wanted to kind of put this in the context of what else we're seeing in terms of this kind of roadmap of change. So we had Brexit, we had the e-commerce package, we had some knock-on effects of Brexit on the customs implications, but there's a lot of stuff going on across the globe too, particularly in the EU. On here I put a lot of e-invoicing mandates, countries requiring the compulsory issue of a digital invoice, so moving away from paper, as well as new extender producer responsibility requirements, EPR. So we're going to talk about that in a bit more detail later on. But these are coming in this year in France and Germany. So really it never ends. Even last year Brexit, this year EPR, next year possibly more change in terms of e-commerce and e-invoicing.
Let's have a look at these and break some of these down.
Yeah, no. So again, I just want to focus on a couple of the points here. Northern Ireland. I don't think you can have a Brexit presentation today without mentioning Northern Ireland. It really has a very unique position in terms of VAT treatment because it's part of the UK, but for supplies of goods and its relationship with the EU, it's still treated as being part of the single market within the customs union, within the EU VAT system. So getting a lot of feedback from marketplaces and underlying sellers within e-commerce about that special treatment, and it has led to some confusion, possibly some duplication of reporting. So the latest guidance from HMRC is if you are registered for IOS and you are selling goods from Great Britain to Northern Ireland, strictly speaking, you need to notify HMRC of your IOS number, and those sales need to be reported on the IOS return. In practice, are we seeing a lot of businesses being compliant with that? Probably not. I think it's still something people are working towards. Lots of system issues there in terms of reporting, and picking up that data. And then I briefly wanted to touch on product compliance. As UK businesses, European businesses are selling in new markets, we're suddenly seeing more and more focus on product compliance. That could be anything from CE compliance to health certification certificates required at the border, along with the customs declaration, all the way through to brand new taxes the government's introducing. We're going to talk about EPR, but another big trend we're seeing are things like plastic taxes. The UK is introducing a plastic tax later this year. Italy, Spain, Portugal. There's a lot of countries who have this on their agenda. And Rick, what I'm quite excited to see is where this goes. Does it become a bottom line cost to sellers, or is this something that's suddenly very transparent and presented to the consumer on the invoice? It's almost a green badge, isn't it? We are compliant. We're making an eco contribution, or you are paying for these batteries, this cardboard, this plastic. So that may be it may be something that's then added at checkout. Another complexity, as well as VAT, just another tax to consider. And then I've got on here VAT in the digital age. We're going to talk about that in more detail later. This hasn't really had the full press coverage that I think it warrants, but it's a big new initiative from the European Commission. A public consultation and a call for evidence was kicked off on late on Thursday night, I think kind of midnight European time, to go live on Friday. Very small window, I think, to the 16th of February.
That's right. Nothing like a short deadline.
Nothing like a short deadline. This was all expected last year, but it has been delayed. There's a broader consultation open to April, and then we're actually going to see some draft proposals and legislation as early as Q3 this year. So this is looking at 3 distinct areas of particular interest to e-com and marketplaces is the idea of a single VAT registration. So it's the natural evolution of iOS and OS, the one-stop shop, and the idea that more types of transactions will be able to be reported in that return, probably reducing the number of VAT registration sellers need. Even when you're fulfilling goods via marketplaces and maybe you're moving goods and stock around the EU, some of the proposals that we'll touch upon in a bit more detail later, could actually now be reported in the one-stop shop. So very interesting there. It's also looking at the platform and gig economy. So looking at maybe some of the rules that are now applying to marketplaces being a deemed seller, but for broader digital platforms. So marketplaces, platforms selling digital services, arranging for the facilitation of goods and services. So things maybe like accommodation, booking, transportation, booking your taxi, things like that. So, a lot for the European Commission to consider and try and get a harmonized position on. And then finally, e-invoicing and digital reporting. Loads of European countries, and in fact, it's a trend across the globe, they're introducing their own digital reporting requirements. Anyone on this webinar who's registered for VAT in Hungary will know it's basically real-time reporting. The moment you raise that invoice, the invoice data is sent to the Hungarian tax authority. If you have an establishment in Italy and it's Italian subsidiary, your invoice has to be raised via a government e-invoicing platform. The government actually have the tax on the invoice and the details before the customer does. And then we're seeing other things. So Portugal is introducing a requirement to have a QR code, so a 2-dimensional barcode that uniquely identifies the invoice. And that then allows the consumer, to get their phone out, open up the QR code, see that you have a right to charge tax. But other countries are then using that to enter customers into a lottery. You can win a car. All things people are doing to try and improve compliance across the board, reduce the VAT gap, improve tax collection.
Yeah, and a lot of these may seem like additional complications, but the reality is, particularly with OS and iOS, they are simplifications. They're less returns. So, if you look at a popular Amazon type FBA model, if you're securing and holding goods in 7 different countries, particularly as an international seller, it actually means that you need 2 registrations potentially. Right?
Potentially, exactly. And we'll look at the options being put forward in a minute. There's 9 different options that have been put forward as part of the consultation. They're certainly not mutually exclusive. There's only a couple which are. And I feel that there's real momentum for this. The idea to reduce the burdens, the barrier for cross-border trade for SME businesses. Helping them scale up quickly and reach more customers.
Yeah, absolutely. Let's dive into some of this lovely feedback that we've been getting on iOS and some of the stats. Impressive.
Yeah, so when the iOS rules came out, a lot of people were speculating how many people would register. The European Commission's view is about 1.2 million sellers have been impacted by the change in e-commerce rules. So, huge wide base of sellers, not only across the EU, but out of region too. The UK post-Brexit, China, US, anyone selling to European consumers. But actually, when we look at the hard-code stats of iOS, only 7,500 businesses have registered. So on one hand, it seems a success, 7,500 businesses, but there is a big gap between that figure and the 1.2 million sellers affected by the new rules. So what does that mean? Well, I think the big thing to take from that is the marketplaces have really taken the slack. They've really absorbed the impact of iOS and the changes, and the deem marketplace seller rules, are really covering the vast majority of transactions. And even looking at that number of 7,500 and what the marketplaces are doing, the European Commission's view is that represents about 90% of regular low-value imports into the EU. So, off the bat, that's a success. There's probably quite a long tail for that final 10%. Maybe smaller businesses, less frequent shippers, to European consumers. Some other interesting facts. So the average transaction value under iOS apparently is 32 euros. So the tax take on that, isn't huge. 20 million shipments in the first 2 months. So a very good start. So, well over 60 million in total. But I suppose with that volume, going through, European customs, different ports managed by different customs authorities, there have been some teething issues. So there's been a recognition, I think, both by the European Commission, but also feedback from marketplaces and sellers that goods have been stuck at the border. There've been reported cases of double taxation. Sellers may have already paid VAT at the checkout, at the point of sale, but once they figured out their goods are being held up at customs, they're then paying again, so they're released. There's been talk of fraud, so other businesses' iOS numbers being declared, including marketplaces. So some of those numbers have been shared online. Some businesses are declaring those on an import declaration, so the goods go through the green channel, but of course they're not the ones declaring the tax. And the idea is customs authorities, have now 2 sets of data. They have the iOS data, which the tax authorities get through the submission of the iOS return. That data is shared with every tax authority. But then you have the individual customs authority data, based on the customs declaration that's made, and that's a control tool they have now to compare those figures. But of course, where there's fraud, those numbers won't match.
Alex, in terms of preventing some of this, obviously technology does play a large part in this, right? So you need to have some form of a tool, software, doing things like reconciliation between what the sellers are doing, what the marketplaces are doing. Are you seeing any particular trends or responses from marketplaces and other businesses to prevent the use of their iOS number fraudulently?
Yeah, I think a lot of businesses have historically published their VAT number on their websites. Maybe that's something that's expected in the marketplace, and in the market. To see your number, to know you have a right to charge tax. Maybe it's used as part of onboarding. But I would say the iOS number should be shared with vendors in a secure manner. It shouldn't just be available to be seen, via Google.
Chucked on the bottom of your website. Yeah.
The other thing is just trying to be a bit proactive in monitoring usage of that number. So it is possible to obtain import data. So reconciling where the number's been used compared with the sales you've made under that number at the point of sale. So it's something the European Commission are aware of. It's certainly been looked in at the moment, and they are considering different options to make that more secure. So, where could that go? Could we see something to, really evidence, who the seller is and, the right to use that number? Maybe something like a digital signature. We just don't know, but it's certainly under consideration. It is a major focus of the European Commission at the moment to get rid of fraud there, and make this more of a success. And then finally, just on the slide, some stats which maybe aren't that surprising. what were the top three ship from countries under IOS? Well, Great Britain, post Brexit, a lot of shipments to the EU. China number 2, US number 3. Little surprise there. And then you're looking at the major economies in the EU in terms of the ship to countries, Germany, France, Italy, Ireland, Spain. No huge surprises there. So I touched upon this briefly earlier. So this is this European Commission initiative. Again, another big change in the EU's VAT policy, how VAT is charged, collected, remitted. And what we're going to talk about now is just focusing on this concept of a single VAT return. So very on point for marketplaces and e-commerce sellers. As I said, 9 options have been set out. 5 of them more focused on the one-stop shop, domestic supplies within a country, or cross-border within the EU, and then another 4 in relation to the import one-stop shop IOS. So, some of the examples here, extending it to enable intra-community supplies and acquisitions. So that is movement of own goods, moving your inventory from, for example, one warehouse to another, France to Spain, Germany to Poland. Ordinarily that would trigger VAT registration requirements in both countries, the ship from, the ship to. A lot of fulfillment programs offered by some of the major marketplaces, normally trigger that. So if number 2 is enacted, that's a huge simplification. Suddenly reduction of VAT registrations needed, by your average seller. Number 3, again, very interesting proposal to include B2B supplies of goods and services. Again, would reduce the number of VAT registrations, and also streamline reporting and returns. And then number 5, many countries at the moment in Europe have a reverse charge on goods, B2B, where the seller doesn't have an establishment in the country. So we've already seen this in France, in the Netherlands, and Spain. But under this proposal, if number 5 was also introduced, there'd be a general B2B reverse charge, which again would reduce the number of VAT registrations required, and the requirement to physically charge tax on a sale.
I bet a lot of marketplace sellers and merchants are saying, well, hurry up, let's make this happen, because it's going to supercharge our business and allow for the simplification, particularly when your international business, B2B, selling into EU, it really is a huge difference in the business. So 16th is when we're looking at the potential consultation to finish, and you say Q3 is a timeline for this to.
Yeah. So Q3, we should have a lot more information released by the European Commission. There's a study report being compiled as we speak, by some third parties. There'll be a full impact assessment. People are considering the IT implications, and then there will be a replay of the feedback gathered from this consultation and the call for evidence. So, this is really the opportunity for businesses to have their say. Avalara will ourselves be responding to the consultation. So, of course, we want to hear from customers, from the sector. So, do feedback to Rick and I as well. But very interesting. We're expecting a proposal on this in Q3, and I then think the Commission will move quickly. There's of course a lot of legislative hurdles to pass, but this has already started. There's already been debates in the European Parliament. I was listening to one in December, and there's been some initial votes on some of the broader goals and aims of this. The devil will be in the detail, but I think the real driver here is how do we free up small and medium-sized businesses in the EU, from a lot of red tape, a lot of cost, and additional compliance burden.
So I have a question, Alex. I believe the €150 threshold was set for VAT because that equates to the level where import duties have to be paid. Is there going to be anything like iOS to make import duties just as easy? Otherwise, am I still going to have to do a ton of paperwork anyway for sales over that level?
It's a very good point. And yeah, of course, it wasn't a coincidence the level was set at 150, exactly the same as the customs duty threshold. And you will see number 6 here, removing the €150 threshold is an option being put forward. And I think the European Commission like this, the idea that, why stop at 150? Let's make it easier to charge VAT at the point of sale. Let's not have the issue of the border. Who's the importer? Who's paying the cost of that import VAT? But there's definitely been a recognition that it needs to work. It needs to interact with the customs rules. So, what does that mean? Could there be a simplified customs payment mechanism? Maybe. Could there be a dual system here? The VAT gets declared one way, the customs duty the other. It's possible. We've already seen that as a result of Brexit in the UK for import VAT. Most businesses should be taking advantage of postponed import VAT accounting. The VAT becomes a reverse charge in the VAT return, but any customs duty, still needs to be paid at the time those goods are cleared. So, they are intertwined, and I know at the moment there are discussions, at a commission level, looking at that interaction. What are the implications from a technology perspective? The customs system, and how that may interact. So, very good points. Let's see what's presented.
So I think there's 2 clear messages that have come across so far. One is there's a lot of changes which have hopefully made things easier, like iOS, and the other is that there are many changes coming which could also make it easier. What would your advice be for someone that wants to respond to the EU submissions? Do you have some Avalara responses that people could, I wouldn't like to say just cut and paste and copy, but that they could use as guidance for small businesses? Or are there some top points you can give us now? And also, where would we make these submissions?
Yeah, lots of good points there. I think I've now got it to do to, maybe write a blog on this, to provide a bit more detail, and maybe provide some initial thoughts. In terms of, how you participate in the consultation.
I'm wondering if it's time for Avalara to start a kind of mass petition that the retailers could sign Avalara's submission, and you could say, here's a representative from X tens of thousands of retailers.
There are certainly some bodies already doing that within the EU. I think a lot of the kind of e-commerce associations. What we are likely to do, we are thinking of putting a lot of these options, almost to a public vote. So businesses will be able to, say, is this a kind of good, bad, indifferent proposal, and then, hopefully we can use the power of our customer base and partners to give that message to the European Commission and help frame that. And we certainly want to be part of that decision process and part of the discussion. But in terms of participating in the consultation, it's all available online. There is an online, let's call it a questionnaire, very simple questions, selecting different options, can be completed and submitted very, very quickly. I know some businesses have already done that, hot off the press. There is a much broader consultation as well. Businesses will be able to, send in a letter, send in more detailed concerns, maybe getting into the micro level of detail about, what this could mean from systems and from a commercial perspective. But what I would say is, just have a think about these, identify for each option, what are the use cases that affect your business? Is it material? Does it give you a material benefit? Is it a positive? Is it a win? Are there concerns, with some of these? Would there be impacts on, potentially cash flow? There's one of the options says, okay, we can report B2B VAT on a one-stop shop return, but you wouldn't be able to take an input tax credit in that return. You would have to put in a claim via the refund system. So, it's going to impact different businesses in different ways.
Can I just ask to clear up some confusion there as well? You're talking about one-stop shops, and you're talking, which is an OS, and you're talking about iOS. What is the difference? Do I need both? When do I need one? When do I need the other?
Rick, do you want to take that one?
Oh, yeah, I can take it. Potentially, you need both. It depends on the way you're trading within the EU. The iOS effectively is all about importation. So it's the import one-stop shop, as Alex was just discussing, and the one-stop shop is the OSS is the one-stop shop, which is effectively more applicable to, let's call it the replacement of the distance sell system that existed in the EU. So it's rather than requiring a registration in Germany, France, and Spain, when you crossed the historic thresholds that were in place, you can just do all the reporting with one local OSS registration, which could be in Germany, hypothetically. So it's you potentially need both, depending on your business model, but not necessarily. But they are very different. One's exclusive to imports, and the other one is all about EU sales.
Yep, and the iOS has a threshold of 150 euros. Of course, yeah. There is no value threshold on OSS OS. So you're looking at value on the import side. Where the goods are coming from, they're coming outside of the EU. But if the goods are already within the EU and free circulation, you're then in OS.
So one last question at the moment. I know that when Brexit happened, the iOS didn't kick in until July, or at least marketplaces VAT didn't kick in until July. And a lot of retailers took the sort of, why should I register for VAT for 6 months and then deregister because the marketplaces will deal with it for me? Should I be, as a retailer, taking the same sort of attitude with goods over 150 euros, thinking, why the hell should I register for VAT at the moment? If they're going to change it to maybe 10,000 euros or something in 6 months' time, should I just not sell goods over 150 euros to the EU until that happens? Which I know is kind of cutting off your nose to spite your face, but it's saving an awful lot of paperwork and VAT reports and everything that I'm going to have to jump through.
Yeah.
Or is there an easy way just to handle it in the interim?
Yeah, and I think there are lots of commercial considerations there. And there are different ways to deal with goods, over 150 euros. You can act as the importer yourselves, clear the goods through in your name. That does lead to quite onerous compliance requirements. Maybe VAT registration in the country of import, an EU EORI number. Depending on the country, you might need an indirect representative on the customs side. And then you're dealing with local invoicing requirements as well. In that country. So there's obviously a cost associated with that. You could, as some businesses are doing, saying, well, the customer is the importer, and you are responsible for any customs duty and import VAT at the border. I wouldn't say that's a great customer experience. We've all received the note in the post from a courier company or Royal Mail, or customs saying, you owe us monies, and obviously a nice admin fee put on top. Not the greatest customer experience, but depending on your customer type, maybe that could work. We're also seeing kind of hybrid models, combination of the two, where strictly speaking, the consumer is the importer, the import's in their name, but an amount equal to customs duty VAT has been calculated, itemized and charged to the consumer, and then the customs agent is paying that amount over so the goods clear the border. So, more of a pragmatic approach. Of course, you then need to be able to calculate the relevant duties and import VAT at the point of sale, to make sure you're collecting enough. So we've actually seen a huge uptake in our customs classification services. We've got software which will calculate the duty delivered cost, so import VAT, taxes, things like that. One of the commercial considerations is returns. Some markets have higher returns than others. Germany is sky high. But if your consumer is the importer, it's very difficult to ever recover that import VAT, even if the goods are returned. So, often, you're weighing up considerations like that.
Thank you. And we've got another question from the audience. Not sure where this stat comes from, but they say in 2021, Customs Control revealed that 95% of declarations are not compliant due to poor data quality. Do Avalara have solutions to be sure that the correct data is being used in the VAT and customs processes? And in fact, I'd probably rephrase that as, do you have solutions to help ensure that the correct VAT and customs is used? Because obviously, if I declare the wrong type of, if I don't declare the right HS code, it's never going to be right.
Yeah. No, absolutely, Chris. So, we have a number of solutions available, particularly around customs classification. So ensuring you've got the right HS commodity code. That's going to drive the customs duty if there is any. But even if the goods are duty free, they go down to zero because of a certificate of origin, the origin of those goods. You still need to get the classification right. It's still part of a compliant declaration. So we do have that. We've got some quite innovative software that will help pick the right code. We've just had to update that based on the HS 2022. So there's new changes from the World Customs Organization. They always slightly tweak the commodity codes each year. So we've just gone through that process.
And at scale, these can make a massive difference, right, Alex? Particularly if you are selling clothes, as an example, right? If you're going to be selling children's clothes, they're going to have different rates of VAT applied to them, and it all adds up.
They do, and you also need to make sure that as you're selling to different markets, your classification is still relevant. So even though they're all based off, the WCO HS tariff, the number of digits that countries have does differ, and the granularity as well. So, absolutely, if anyone would like to discuss any of the customs duty offerings that we have, please do get in touch. So I'll be very quick on here. Keep talking about entering new markets, and we focus on iOS. iOS came on the 1st of July last year. There are actually a number of similar regimes across the globe. So Australia, New Zealand, Switzerland, Norway, if you're selling low value goods into these countries, you may have a requirement actually to register for VAT, GST, charge the customer VAT, GST at the point of sale. And then, these goods will then clear the customs border. Again, they don't always grab the headlines, these countries, but, sales to these jurisdictions do add up. Some of the thresholds can be relatively low. So, I would say, keep reviewing the value of sales, globally. This is a continued trend. Some of the countries that are going to introduce similar rules to iOS, Belarus from June later this year, from January next year, Singapore, Malaysia are going to do exactly the same too, Nigeria the year after. So this is definitely a trend. It's something the IMF have actually given their blessing to, and they're sending a guide to different governments and tax authorities saying, this is how you introduce this regime. So it will become the new norm. There will again be a lot of these countries having marketplace deemed seller rules, but the devil will be in the detail. And then I know
we've got about five minutes left in the session, but this is something I'm really interested in because I think France introduced an extended producer responsibility, or EPR, from the 1st of January this year.
They did.
I saw on Amazon that for people that aren't registered, they're just going to collect the tax and bill it to their account. So this is something we need to know about.
Yeah, and this was actually new to me. When I joined Avalara 3 months ago, very well versed in the world of VAT, but not eco taxes, eco contributions, and EPR. The idea here is to make the producer and other members of the supply chain kind of bought into what happens to those goods at the end of the life, the whole product life cycle. So different bodies have been set up to manage the registration and remittance of eco contributions across a number of different categories. So typically things that have a high environmental impact, packaging, including cardboard, electricals, batteries, tires, but even things as simple as paper inserts, in the goods that you sell. The legislation's been in place for quite a long time, domestically in a lot of European countries. But the big change we've seen this year is France and Germany have said the marketplaces are now on the hook for it too. So that they're making it a requirement, for goods sold on the marketplaces for someone to be registered and remitting the tax. So yeah, I read the same thing from Amazon. In France, I believe in France they are able to register and remit the tax as the marketplace. But my understanding for Germany, completely different picture. If you don't have the registration, there is a risk that you'll no longer be able to sell on a German marketplace. Because the risk is with the marketplace in terms of joint and several liability, but without having the ability to submit on behalf. So the big dates here: 1st of January, of course, just gone in France, and then in Germany, 2 tiers from the 1st of July in terms of secondary packaging, and then January next year, more categories come online. So another thing for people to get to grips with. Some of these taxes are based on units sold, others are by weights. People who have pulled together Intrastat declarations over the years, it's the same kind of thing. We're starting to look at what are we selling, what's the commodity code, are they taxable, at what rate, number of units. There are some flat fees as well that you can take advantage of. So a whole new world of complexity. It's something we're looking at. We're in discussions with marketplaces and some sellers about these requirements. So again, we'd be happy to talk about this in more detail.
And talking about it in more detail, we've got about 60 seconds left. So before we get cut off, if people are watching today, they can, of course, if you're watching Tame Bay Live in person, go to the Avalara showcase to find out more. But for those that are watching this after the event's closed, how do they get in touch with you guys? Have you got some links or emails you can share?
Yeah, absolutely.
You on Avalara.com, of course, is an easy way to get in touch with the organization in general, but you can also, of course, feel free to get in touch directly with any specific questions that have come up as a result of today. I'm on rick.verma, that's avalara.com, and Alex is on
alex.baulf at avalara.com.
There you go.
So yeah, and feel free to connect with us on LinkedIn as well. We share kind of daily blogs on VAT customs and changing requirements. So more than happy to connect and speak.
So an awful lot going on here. EPR is something that we definitely need to take notice of. iOS, the marketplace may be doing it for you, but you may need iOS, you may need OS as well if you've got goods in the EU. And those requirements are subject to consultation by the EU, and everything may change in the near future, which hopefully designed to make it easier for you. but 9 times out of 10, these things leave a lot of heartache and paperwork to do. So please do get in touch with Avalara, as they're the absolute experts on this. I'd like to thank both Rick and Alex here today, and also a mention to your colleague Sasha, who's been hosting some of the other sessions on Tame Bay Live today, because you are the day host for today. So for more information, go to avalara.com, and thank you so much for your time, Rick and Alex.
Thanks, Chris,
Thank you,
and thanks
Chris.
everyone for watching.